All right. Hey, gang. Nate Bear here, lead technical tactician for Monument Traders Alliance and Trade of the Day. And in today's video, I want to do a quick look at the indexes. I want to update those for you since last week. I've got a stock that I am watching for entry. Hopefully, I'll get that today. And then I've got a couple of questions that have been emailed in that I want to take a look at as well. All right. So let's just dive right in. So the first thing I want to discuss is the index, the QQQ. The NASDAQ. And what we've been discussing here every week is that during August, we've been in this channel down. We talked about needing to break out of the channel, and then we talked about needing to hold on a pullback so that we could start setting up, instead of a series of lower highs and lower lows, the inverse, which is a series of higher highs and higher lows. Okay, so what's happened over the past week or so is that we got that channel break right here. This was a pretty interesting day with NVIDIA earnings, but we came all the way back down and we've now back tested this channel. And so far we are holding. So far we're holding. So this is constructive, right? What needs to happen at this point is that we need to come up. It doesn't have to be today. It doesn't even have to be this week. But the next major thing that happens is that either the low of the move is going to get tested and taken out, or the high of the bounce is going to get tested and taken out. If we're long, what we want to see is we want to see the indexes come up and take out that post NVIDIA earnings high right there. If we can do that, then we've got the structure that we're starting to need, that higher high, higher low. Okay, so that's what I'm looking at in the indexes. This chart that I want to show you, the one that I'm looking for entry, is actually right here in Adobe, ADBE, Adobe. And this chart obviously is very strong, nice, strong chart. We've got this really solid pattern where we've got our move higher. We've got this bull flag being built. We're trading above the 55 EMA. You know, a lot of charts these days right now, they're like down here at the 55. If we just look at, don't have to look far, but look at Apple for comparison. Right, so Apple down here with the 8 EMA on the bottom, the 21 EMA in the middle, and the 55 EMA on the top. Those averages are reversed, right? Apple's trading under the 21 EMA, is trading under the 55 EMA. Well, Adobe, we don't have that. Adobe, we have everything stacked positively. So we've got the 55 on the bottom, the 21 in the middle, and the 8 EMA on the top. And Adobe is trading above all of those averages. So everything is stacked positive from that perspective. So what I need is a little bit of a pullback. I want to buy right in through here. You can see this dashed line. This is where I have my alert set, which is about 521. But between 519 and 520, right in through here, that's where I want to get long Adobe for a move higher. Now, Adobe has earnings coming up 14th of September, so in about a month. And what I'd like to do in Adobe, sometimes you'll hear me say, hey, you know what? I want to buy calls that expire the week of earnings. I want to buy calls that expire the week of earnings. Well, if we do that in Adobe, they're pretty expensive, right? You know, we'd have to go pretty far out of the money to be able to go and pick up something that's reasonable. Maybe like the $580 calls or $450. Not terrible, but that's $50 out of the money. So what instead I would prefer to do in Adobe is just come in here and go out to next week instead and do what's called a call debit spread. So what I want to do here is I want to buy the $530 calls, and then I want to sell the $540 calls against those. If I can get that pullback to about 520, this trade should be able to be put on for about $2.50 or so. So that's the trade that I'm looking at. So again, buying the 530 calls and then selling the 540 calls against them to create a call debit spread. Again, if Adobe comes off or comes down into this 519, 520 area, that's where I want to start to get involved with Adobe. All right. So now I've got a couple of questions coming in from Marcia. And thank you for sending in your questions. I always appreciate getting feedback from members, and I love going over things. But looking at a couple of these names that you sent in, NEO is the first one. Now, NEO is one of those stocks that I used to love to trade. One of my biggest trades ever was in NEO, but that was, of course, way back here when NEO was just creating the series of bull pennants and just kept going higher and higher and higher. At this point in NEO, I want to like this name again, but it's hard to really get behind it. However, and the reason I say it's hard to get behind it is because it's just drifting lower and sideways, and it's been in this sort of like chop hell for for a year almost here, where it's done literally nothing except trade around $10. That's tough to do anything with. However, we are starting to see NEO get a little move higher. And now what we need to see, again, like we just talked about with the indexes, if something is going to change structurally here with NEO, we need it to do one of two things, right? This is the low of the move. This is the high of the move. If NEO is going to start getting interesting again, it needs to take out the high before it takes out the low. And I know that's a little bit of a wide range, sort of a general concept. But for me, there's not much to do in NEO until it starts to put in that series of higher highs and higher lows. So if this is the low and this is the recent swing high, if this now becomes the new swing low, that's a higher low, right? Then we would need to put in a higher high, and then we have that stair step up pattern, that higher high and higher low pattern. Okay, let's take a look at one more, EVGO. Now, this is a sort of a similar situation where the stock really isn't going anywhere. However, it has had a nice move recently. So if we look at this and say this is the low and this is the recent high, we need to hold above, right? We need to hold above that recent low and go and push and make a new high. If that happens, then you get in a mode where you can start buying pullbacks, right? Because you're going to start having higher highs and higher lows. All right, I hope that helps. A couple more names that were emailed in, PSTG. Let's take a look at this quickly. This is a really nice chart. So the only thing I see in PSTG is they have earnings literally tomorrow, right? Wednesday. So I like the idea of picking PSTG up off of that 55 EMA. However, earnings could have us either way up here or way down here. So it's one of those things where it's a wait and see. If earnings come out and it's a non-event and we're still within this really nice bull flag, then off the 55 would be a great entry down through here for a move higher. I like that one quite a bit. And then finally, ASML. This one is interesting. This is a big stock. I like the structure. I like this move higher and this sort of flag that it's building here. I imagine the options would be somewhat prohibitive, but you've got the 200 simple coming in right here, which is this dash line, which is acting as support. So if you wanted to do something in ASML, I would suggest using this backstop as your stop. So on a close below, it can pierce it like it did right here. Let me zoom in so you can see. You can pierce this level. But if you start to close below this 200 simple, that opens the door for a bigger move lower. And that's what would be my exit. So I would get long, probably using either a put credit spread or a call debit spread, maybe a call butterfly, one of those option strategies, and then just use this 200 simple as my backstop. All right. I hope it helps. If you guys have other questions, just email them in. That would be great. I love getting questions from you guys. And I hope it helps. We'll see what the market gives us this week, and I will talk to everybody soon. All right. Later.